okay? So what they do is the bank lends you the money, but SBA guarantees the bank if you don't pay. So a real life situation is if I do a loan for, we'll say Kendrick, okay? If I'm going to lend you $50,000 working capital for equipment or whatever you need for the business, okay? But the government, SBA, protects my loan 85%, that if Kendrick fails, the government pays me 85% of what's left on the loan. So that encourages me as the bank to say, okay, usually I wouldn't do that traditionally, but I'll do it in this case because of that.
Kendrick would not fail, I can tell you that.
Kendrick will not fail. That is absolutely true. SBA loans cannot be turned down for lack of collateral. Circle that, highlight that, wave your hands. That's a big deal, okay? They will lend to startup businesses. You can be under 2 years in business, and you can use projected income within reason, okay? These are the two types of SBA loans out there. First one is called an SBA 7A loan. It's made for general working purposes, whatever the business, whether it's working capital, which is pretty much the holy grail of whatever the heck you need the money for, equipment, anything, okay? It is not for, I want to buy investment real estate and the SBA will protect it if that house fails. That's not what it's for, okay? The important takeaway on this, though, is you do need a business plan regardless of dollar amount. So it's very important that you are prepared to come to the bank. Not, again, how much are you going to give me, okay? Another piece of takeaway is called the SBA Link System. This is the coolest thing the government has ever done, period, okay? Have you guys ever heard of Lending Tree? When banks compete, you win, right? Think about this as business loans. SBA, you go on to this website and you say, my name is Paul Long, I own Paul's Plumbing, I need $50,000 for working capital, here's the details, I'm not a veteran, and that's it. Boom. It spiders out to all the lenders that participate in the program, like Timberland Bank, that are interested in that loan. This is a free service to you, and it's a free service to the bank that are SBA lenders. Okay? So every day I get 5 or 6 emails. I guarantee if I check my email right now, I would find a Pierce County business, because it goes by your county. So you would get lenders for Pierce County saying they're interested in your loan request, or not. We'll go over a few of those. Those are very, oh God, that's the best part of this presentation. But the lender has the opportunity to say, sure, I want your information, and then you get my information, and I get yours. And then we link up. Okay? Again, absolutely free. Very cool site. If you go to SBA.gov, this is all over their website because it's such a popular tool. Okay? So bottom line, let banks fight over you. Yay! Real life story. And this one actually, this is a real life story of, clearly not the business name because I'd get arrested or something. But this actually came from the SBA Link site that came across. So this Leslie Staging and Equipment. Been in business for 3 years and has been really successful. Needs $75,000 to grow her business and to sell furniture that's used after the staging is completed. Makes sense? You understand, like real estate staging? The total collateral is she had $20,000 in inventory, she had no accounts receivable, and she had $2,000 other assets. So she had $22,000 worth of stuff that I can take as collateral, but she needed $75,000. What was SBA's thing? You don't need to be fully collateralized, okay? So we did an SBA 7A loan for $75,000 on a 5-year note. The business is growing. They have a grand opening here coming up next month to start selling their furniture that they have such a high demand for. They had the business plan, they had the projections, they were able to do that. This is the power of an SBA 7A. Okay? Another SBA loan, I'm going to go over this real quick. and that is an SBA 504 loan. There's 7A and there's 504. 504 is made for real estate. If you want to buy real estate, commercial real estate, this is the tool to use it. It's made for real estate or really large pieces of equipment, like equipment that makes boxes or something like that. You can put 10 to 15% down, larger dollar amounts. Pretty much there's about a $300,000 minimum to do this program. But it's really made for that. And of course, again, you still need a business plan. I'm now going to go over some of those other types of lending out there that maybe that banks don't offer, but you all hear about, okay? Has anyone heard factoring? Okay, 1, 2. What factoring is they take your accounts receivable. So if everyone here owes me money, then that's my accounts receivable, okay? There are companies out there that will take that as collateral. So instead of you paying me, you pay directly Bob's factoring company. Okay, so your clients are paying somebody else, but that company is giving you the money up front. Okay, so if you have a large job, this is pretty important. If you do construction, this is really big in any sort of construction. The problem with this is that's 10 to 15% interest, and they usually take that right off the bat. So if you have $50,000, they may give you only, here's 30, but they also take the risk if your clients don't pay. Again, every loan product is out there, and there's pros and there's cons to it. It's up to you to kind of figure out what's best for you and your business. Okay, so that's factoring. Hard money. You guys ever seen the movies with Guido? Yeah, I'll give you the 150,000. I'll kick your legs, or that's really not what hard money is. Okay, hard money loans are really primarily for real estate. Okay, so they're usually 1% per month interest rate. Ouch. Okay, so that's about 12% annually a year. They can fund quickly, but it's an expensive way. And let's talk an example of how this is actually useful for a client, okay? So it's called bad timing. This is Steve. He's the owner of Bob's Transmission.
Bob doesn't own it anymore. That's the first problem.
I don't have a thing against Bob's, I swear. No one's here, Bob, right? Okay, good. He has a commercial building worth $900,000. He owes $200,000 on the building. Okay. Very successful business for the last 50 years with solid cash flow, but he ain't paying his bills. No red flags there. Oh, there it is. Owes $75,000 in back taxes. Okay. Has 2 months to pay or the business is getting taken over. Bank said no. Why? Okay, come on, duh, right? Okay. He had a hard money broker do a loan for $275,000 for him, paid off his taxes, paid off the note, and has the building as collateral. 12% a year. He has it for 2 years. The loan is only good for 2 years. At the end of 2 years, he must be refinanced, or what? Guido gets his business, okay? And do you think Guido wants his building? Hell yeah, he does, okay? So that's hard money. But here's the deal, though. 12% 2-year building was what we talked about. The bank will probably refinance this in 2 years after the dust has settled, okay? Because as long as he keeps his nose clean and learns from his mistakes, continues to make money, continues to move forward, then he'll be bankable, okay? That's what a hard money loan is. Because even a bank wants a big cushion, like a $900,000 building into a $75,000 loan. We'll take a little bit more risk on that. But that's hard money. I'm going to get on a soapbox. I'm sorry. Merchant cash advance. This is the biggest thing that is going on in the world right now of finance. and it is going to be the next crash, okay? What a merchant cash advance is every single time you swipe, let's talk a coffee shop. Every single time you buy your $5 coffee and they slide that card, they need money to grow. The bank ain't gonna give it to them. They don't wanna use Guido, whatever the case is. The merchant company will give you a loan with daily payments for your loan for a certain period of time, okay? So if you do $3,000 a day, they'll give you $150. Check out that sexy interest rate, 18 to 22%, okay? Funding is less than a month and it's secured, so it's a great deal for them, okay? If you ever see a sign on a building that says, our machine is broken for taking credit cards for a long period of time, they ain't paying their bill, okay? So you got to be really careful with that. It's becoming more and more. We're going to start seeing a lot more rules, regulations, and problems coming down the road. So the takeaway is kind of stay away from this one, please, and encourage your customers to do so too. There's other things called peer-to-peer angel investors, also known as suckers. Angel investors. The borrower receives a loan from another individual rather than from a lending institution. It's kind of like a hard money deal, but angel, it's a nice, softer name, right? Okay. Average transaction sizes are small, okay? Yeah, that's a 36, okay? Quick funding, but they're out there, and it all comes down to how bad do you need the money. And so you can be very careful with that. We've all seen, heard, can sing a jingle right now on any of these businesses. Cabbage, Rapid Advance, On Deck's the new big animal in the market. All of these have daily payments. I have a client that I talked to a couple days ago. He used On Deck to purchase a machine that prints things, and it was for $40,000, and he has to pay $180 per day. He wakes up in the morning, he checks his bank account, On Deck has taken out $180. What do you think that does to the business's cash flow? Okay, how bad did he need it? Does he know he has a cash flow? In his case, he was fine with that. Okay. Again, these are all options. Not all options are good for everyone, but be aware of some of these that are in the market. Hopefully you guys can see that here in the back. I thought this was a pretty interesting slide. Percent of applicants approved for financing based on all of those things I just talked about, okay? Bank loans, so average about what, 11% get approved through a bank? Doesn't sound real sexy, does it? Asset-based lending, so this is your Guido. This is your accounts receivable financing, your On Deck, your lines of credit for your business, all of that. That's the most popular one. Factoring, talked about that. Angel investors, and then you really get into some complicated stuff that I'm not going into. Venture capital funds, mezzanine financing, private equity. Google it. There's a whole lot that goes into that. This is another good one. Loans approved by purpose. And this is a nationwide average. Purchase of transport vehicles. Look how little that is. And this is business, by the way. Okay. Construction. Okay. Working capital. Whew. That's a big one. Purchase non-residential property, commercial buildings. Other purpose, which is really working capital, because that's pretty much the same thing. Purchase or fixed assets other than listed buildings. So the bottom line is banks are lending for working capital. And the bottom line is working capital is for whatever your business needs, okay? Marketing, whatever the case is. Your books. Whoops. Of course. Okay, we're going to do it this way then. Your books. I'm not going to get into, this is not an accounting class. That will bore you. You guys can all leave right now. I do want to kind of go over just really quickly on this. The balance sheet. Use QuickBooks. There's a lot of great programs out there. At the end of the day, use QuickBooks. It's very accurate. The thing with QuickBooks is it's a garbage in, garbage out system, and that's any accounting system. So if you put in false information, you'll get false information out. So make sure that you're working with a bookkeeper, an accountant, to getting trained on how to actually do your books appropriately. And there's lots of good bookkeepers out there. There we go. A balance sheet. So everyone should have a balance sheet, and this is pretty much what it is. It pretty much says, what are all my business assets? What are my liabilities? And the bottom line is, what is my business worth? Okay? Everyone should know. Your business should be worth something positive. Should.